consolidation, but once price breaks above consolidation, we have free range to previous high on Matic. So when we look at long position, something of this nature. Okay. Awesome. All right, guys and girls, ladies and gentlemen, we are going to start FXG Live now. Okay, for those of you that were with us for pre-live, thank you so much. That was a lot of fun. Okay, as you all know, we are currently in Aussie CAD and CAD Yen. Okay, moving on, we're going to talk about a couple pairs that we're waiting for. Okay. All right, what's going on in terms of news today? Okay. In terms of any announcements or anything of that nature, we don't have anything till tomorrow in terms of Kiwi, okay? So I know that Jake's going to be managing any of our trades overnight, all right? And as far as that goes, this week in terms of the stock market, we're seeing moves to the upside. That's because there's no real significant IPOs coming out this week. More money is kind of going back into tech stocks. There was a healthy move to the downside, even though I didn't like it myself. I'm very heavy on tech, so it did affect my portfolio significantly in terms of my long-term holds. However, we are in the long-term move, and we hold this, and it will move to the upside, and specifically Tesla. I own a lot of Tesla. Anyway, so we are going to talk about Euro, Kiwi, Swiss franc, Yen, CAD Yen, Ethereum, Cardano, and we'll even take it to Matic, which we just saw, which I did like. Okay, thanks, Roop, for that. All right, so monthly time frame here, Euro Kiwi. What's the first thing we do? We identify fundamental direction. Euro is currently at a positive 6.7. Kiwi is currently at a positive 2.6. Okay, short-term direction to the upside. That's what's happening right now. Long-term direction is what? It is flat. Midterm direction flat. We don't know. Both Euro, both Kiwi will gain strength as the economies open up. But short-term direction is to the upside. Okay, so we have our monthly upper, monthly mid, monthly lower, weekly upper, weekly lower. Okay, just area of battle between buy pressure, sell pressure. For those of you that are new to the team, do not worry. Okay, there's Forex Gentleman University, which shows you how to do this. All right, so you can remove this. What are we waiting for here? Okay, we're waiting for a move to the upside. What do we see here? We see buy pressure. We see a push to the downside. We see buy pressure protecting as expected our weekly lower zone. We see buy pressure break our daily lower to reach our, which could be our daily upper. Let's identify this as a daily upper. Actually, it doesn't need to be a 4H mid-range. Okay, this is more of a daily upper, I should say, or daily mid-range. Okay. Now, what we do know is there's horizontal level of sell sensitivity. The difference is we have a strong move to the upside rather than a weak move, meaning sell pressure comes in and we have a pin bar. All right. We have buy pressure close with a significant bullish candle. We don't have that much in terms of a reaction to the downside at first contact. Okay. Telling us that there's more buy sensitivity than expected. And that's expected, right? Because the euro is strong. It's at a positive 6.7. So that makes complete sense. So we can expect that at some point we're going to make our way back to the upside, but we don't want to look to the upside now. We need to wait for price to break area sensitivity before then we make our way to our weekly upper. But there's actually two trades here that we can take. Okay, so we know what? Strong bullish candle, not much of sell sensitivity. I mean, let's take a look at this when we bring it in. As soon as price made contact, and historically, move to the downside, move to the downside. When we have contact here, we have buy pressure keeping price to the upside. We have almost a very, like a 15-minute time frame, lower level of consolidation, telling us that this move right here is an impulse, not necessarily an overall change in direction. So where are we going to look for a potential move to the upside with price action confirmation for quick in, quick out for strategy 2? Okay, we're going to look at area sensitivity called fibs. Okay, so fib extension left to right, bottom of extension, top to extension. Let's identify. We have 38.2. We have our 50% fib. We have our 61.8% fib. Okay, so as we remove our fib extension, all right, What are we looking for? We're looking for price to make its way to the downside. Okay, we do know we have a higher time frame bearish engulfing candle too, so we're looking for that impulse move. We're either going to have price action. We're looking for price action confirmation and entry confirmation at one of these fibs for a quick in, quick out to previous high. Okay, now if price, and we went over this in the pre-live, but if price does not do that, okay, I guess there's three scenarios here actually on Euro or Kiwi. Okay, a move back to previous high for quick in, quick out. If price makes its way to lower level of consolidation, we'll be placing a buy limit order or entry at price action confirmation, depending on how strong that move is. Okay, but if it's an average move to the downside, we're going to look for a BLO to the previous high. And if that doesn't happen, let's say both scenarios just don't work out. Okay, we're going to look for push, breaking previous high, which we know is consolidation, exhaustion, continuational move for free range where? That's right, to our weekly upper zone before we see our next significant area of sell sensitivity. We're going to find our final target. Okay, moving on to Swiss franc yen. All right, Swiss franc yen, as you all know, we're looking to the upside here. Okay. Swiss franc yen monthly time frame, we identify fundamentals first. Swiss franc is currently at a positive, let's change that to the pen, positive 3.6. The yen is currently at a negative 5.2. Short-term direction to the upside, mid-term to the upside, long-term to the upside. Here's what we know. Both Swiss franc and both yen are both safe haven status. But for a consistent amount of time, even when the Swiss franc is weak with the yen, Swiss franc always ends up on top in terms of strength. And that's what we see here in history, right? I mean, other than during the deep times in COVID when Swiss franc was weaker than the yen as its number one safe haven, okay? Other than that, we're starting to see what? Cycles, the cycles that we want to see to the upside. So trend line to the upside, fundamentals to the upside, we're only looking to the upside. Now, as you all know, we talk about free range a lot here at FXG, right? For those of you that have been with us, buy pressure broke sell pressure at what? Monthly zone. This is a significant break. This isn't easy. Telling us that it's got free range where? To which next zone? Assuming fundamentals stay the same. That's right, weekly. Why? If buy pressure can break the sell pressure at our monthly zone and fundamentals stay the same, it's pretty obvious that buy pressure will be able to break sell pressure at its daily mid. It's going to have a harder time breaking its weekly. This is a significant area of sensitivity, just like the monthly, also the daily, but not as significant. So that means we have free range to our weekly upper zone, assuming fundamentals stay the same. So it's all about now just looking for entry, right? When we take it to the weekly and the daily, we see that price is telling us, hey, we have a lot of buy pressure. And why is that? Contact, we have an impulse to the downside. There is no exhaustion. There is no, not even to our 50. It didn't even reach 38.2% fib or the 50 or the 61.8. It just shot to the upside, telling us what? Buy pressure, air support, fundamental support came in for a push. Okay. Harder to do so. It's harder for buy pressure to do so on the weekly or the monthly. Okay. So what do we have here? We had a squeeze. Okay, we had horizontal sell pressure. We had higher highs for an uptrend. Okay, price got wedged. We have a push. Now, whenever we see a push from the wedge, there's two scenarios that we have to be careful of. Okay, scenario one is a stop hunt. Okay, many times when we have wedges, we have a stop hunt and then a move to the downside. I don't think this will happen here. Fundamentals are significantly to the upside. Okay, but for those traders that don't monitor fundamentals, okay, they get stuck in stop hunts in this scenario all the time. Now, when we have this push to the upside, we also are extended from our mean, from our averages, okay? Meaning that as you can see, price tends to make its way back to its uptrend before then it continues its moves to the upside. So as we are making a push, we're also extended. It doesn't, what I'm trying to say is I don't necessarily think we're gonna make another extension because then our separation from our mean is going to be significant. Now, one thing to understand is that this is actual strategies we don't use moving averages in FX. We don't need them. I don't need stochastics. I don't need RSI. I don't need to know. I know based on supply demand based on price action, based on area sensitivity. When price is overbought or oversold, I don't need MACD for that. I don't need RSI. I don't need stochastics. I don't need moving averages to tell me when they cross. I don't need any of that crap because we know what we're doing here. But what we do need to keep in mind is that there's still respect to those averages. And though that respect isn't just through retail traders, that respect can also come through methods of, like, for example, artificial intelligence or algorithms. Okay, mean reversion algorithms are a very popular thing. There's hedge funds that literally have that. And what is a mean reversion algorithm? So let's say this is the uptrend, okay, which means that we'll probably have our mean somewhere around here. Okay, our moving average is probably somewhere around here. When price gets too extended from that average, there's literally hedge funds that make their bread and butter by shorting, okay, expecting that price will eventually make its way back to that average. Okay, so as we made that push above the wedge, it doesn't necessarily mean we're just going to make a straight shot to the upside, because there's no announcement that will give us that buy pressure to do so. So in my opinion, we're going to see a downtrend on the lower time frame, and then we're going to look for that break to the upside. So let's take a look at the 1H. All right, when we take a look at the 1H time frame, all right, we can see that. In my opinion, what's going to happen is we're just going to see something of this nature before then push exhaustion to the upside. Okay, so Swiss franc yen, we're keeping this on the back burner. We got a close eye on this pair. Okay, I'm going to take it to CAD yen now. All right. Okay. On to CAD yen. Monthly time frame. We're in this pair, okay? CAD yen monthly time frame, strong move to the upside, breaking beneath our weekly up, lower, weekly upper, making our way to our breaking above our daily. Now we talk about free range, right? First off, fundamentals. Where are we at fundamentally? Positive 4.4 on the CAD, negative 5.2 on the yen. Short-term direction to the upside, long mid-term direction to the upside. We know that CAD is correlated to the price of crude oil. Thus, we believe we're going to go to the upside here. So what's going on? We have push, exhaustion to previous area sensitivity, likely continuational push at least to previous high. Let's take it to the daily. Okay, what we can see here is what daily we can see consolidation here. It's very ugly, this price action, isn't it? But what we need to simplify things when it gets ugly. Horizontal sell pressure, horizontal buy pressure. Okay, consolidation. All right, now let's take it to the 4H time frame. All right, what do we see here? Okay, first off, we've identified area sensitivity. Let's make this a little bit more clear. Let's change the color to something different, okay, just so it's more visible. All right, what do we see here? Price is following the uptrend, wedged, bullish engulfing candle. What's after a bullish engulfing candle? That's a lower time frame push, exhaustion. What's next? Continuational push to previous high. So as you all know, we're currently in this, okay? Ethereum USD. All right, Ethereum USD. I like this double confirmation. Okay, let's get rid of all this crap. We don't need that anymore. All right, Ethereum USD. Okay, so as we know, the crypto market saw a big move to the downside that a lot of people thought was Armageddon. I don't think so at all. Okay, when we see the push exhaustion, really we know that price is finding buy sensitivity at its fib. Okay, so let's identify that. Okay, let's go to the weekly to identify that. Let's do, okay, from the bottom of the push. Okay, exhaustion. Okay, what do we see here? 50%, 61.8% fib, excuse me, coming into play. All right, so let's identify that, and then we can remove our fib. Boom, boom. Okay, so 61.8% fib is important. We know that the market respects that. When there's no horizontal area of previous sensitivity, like zones, historically, the market respects this, okay? So here we have horizontal buy pressure, and we know that this is also double confirmation. Strong move to the downside. What's this? Sensitivity, impulse to the upside, not necessarily a change in direction. We know that this is what? Take profit, stop losses, limit orders, market orders. Okay, we have stop orders here. This is a reaction to area sensitivity. And then double confirmation. This is what's important. this second injection of buy sensitivity with the bullish engulfing candle close. Now, what do we know? When price makes a push, we get exhaustion. We're looking for continuational push to the upside. When we take it to the 4H time frame, okay, what did we identify? Historical area sensitivity, okay? As you can see, we have a lower time frame area of consolidation here. It's not unheard of that price will either find buy pressure now or make its way for contact before move to the upside. I placed, as you all know, for those of you that joined me for the pre-live, we have a buy limit order down below. If price closes above previous high, we will look for push exhaustion and a move to the upside there. Okay, moving on from Ethereum, we're going to go now to Cardano. Okay, moving on, monthly time frame. You all know what I think about Ethereum and Cardano. I'm bullish on these guys. Okay, I do think that Cardano will help significantly in the future. Continents like Africa, continents like South America, extremely volatile currencies. Inflation is significant. Take a look at Venezuela, 42% inflation last year. That means that the value of their currency, of their dollar, is worth 42% less than it used to be, which is significant. So I do believe that that Ethereum and Cardano will come out and help continents like South America, as you know, in Africa, certain countries, and actually most countries in Africa, other than South Africa, are probably exposed to significant inflation and volatility. Okay, so what do we know here? Buy pressure. Well, we had a collapse to the downside. We had buy pressure come in at buy limit orders, sensitivity, right? Anybody who was short, take profit. Anybody who had a limit order was entered, market order, okay? Sensitivity pushing back to the upside. But what we're seeing here is that buy pressure is starting to respect this mid-range. Even when we broke back below, quickly we broke back above with this bullish engulfing candle. Okay, that's a lower time frame push, exhaustion. We're now seeing continuation move to the upside. When we take it to the 4H time frame, okay, what can we identify here? Again, push, exhaustion, potential continuation push. Buy pressure, what was resistance is now support. We do not have price action confirmation just yet due to the strength of that bearish engulfing candle. When we take it to the 1 hour time frame, in my opinion, we're going to wait for double confirmation due to the strength of this move. We have double top, push to the downside, which is a higher time frame bearish engulfing, impulse to the upside. I believe we will get a retest before then we go to the upside. So we're going to place a BLO at previous low for move to the upside. We're now going to take it to Matic. Okay, Matic. Moving on, monthly time frame. Okay, strong move to the upside from Matic, strong move back to the downside, but there's a lot of volume in this pair. Now, what's important to understand is take a look, push, exhaustion, potential bullish engulfing candle coming up here. Now, we're not yet, we're only on Tuesday. We're not yet potentially going to close like that, but it's important to understand that we do have a reinjection of buy sensitivity. All right, when we take a look at the fib, I believe, as we know, actually, we're going to take a look at it. Okay, 61.8% fib coming in with support. Okay, and when we take it to the 4H time frame, we can see mid-range consolidation. Boom. Boom. As you can see, what is that? Horizontal buy and sell pressure. Horizontal sell sensitivity turning into buy sensitivity, back to sell. Buy sensitivity, sell, buy. Horizontal level of buy and sell sensitivity, battleground between buyers and sellers, okay? Push, exhaustion, we're now going to see continuational push, or we're going to see the beginning of consolidation before a continuational push. So in my opinion, we're going to now take it to the 1 hour time frame. And what are we looking for? We're looking for the break of previous high, okay, push, exhaustion, and then boom, we're looking to the upside on Matic. SL will be below area of consolidation, okay? So that's it, team, for today. Appreciate you all, love you all. And thank you for those of you that joined us for the pre-live. That was a fun hour and a bit. And yeah, let's keep rocking. See you all shortly. See you all tomorrow. Bye, everybody.